Welcome to etvFutures.com. Today is Thursday, November 29th. I'm Caitlin Sisney with your Commodities Open. Crude oil rose more than $4 a barrel after an explosion cut Canadian oil shipments through Enbridge pipelines that supply about 15% of U.S. crude imports. The blast yesterday killed 2 workers and initially closed 4 pipelines that supply U.S. refiners with an average 1.5 million barrels a day. 2 of those have now reopened, and a fire near the Clearbrook terminal in Minnesota, where the lines meet, has been extinguished. Crude oil is now trading back down at $92.83 per barrel on the NYMEX. Meanwhile, natural gas is trading at $7.49 per million British thermal units. Gold and silver fell for a third straight day after a gain in the value of the dollar reduced the demand of the precious metals as alternative investments. The dollar rose after a report showed U.S. economic growth surged in the third quarter. Goldman Sachs says the currency's decline is nearing an end and urged investors to sell gold. Gold is trading at $804 per ounce. Silver is trading at $14.425 an ounce. This morning we're joined by Mike Fitzpatrick from Man Financial. Mike, how is the commodities market trading this morning?
Good morning, Caitlin. To really explain today's markets, it has to be done in the light of what occurred yesterday. And apparently this idea of an OPEC production hike, along with a rallying dollar, and disappointing inventory report, sent the market into a free fall yesterday. I think more than that, though, what occurred was end-of-the-year window dressing for some of these speculative interests who have recently gotten a little beat up in the equities market because of the subprime lending crisis. So the old rule of thumb in the stock market is sell whatever you can, and one of the things that was most profitable for them during the years were the commodity positions, and I believe that was where a lot of the cash will come from to dress up year-end performance. The abrupt turnaround overnight was a result of a fire at an important Enbridge facility in Minnesota that closed down all 4 of the pipelines that carry about 1.5 million barrels a day of Canadian crude down to refineries in the United States. However, by the time the market opened this morning, 2 of the 4 had been restarted, and the fire had been extinguished. Also this morning, natural gas storage came in about as expected, and those prices for the moment are seeming to hold. However, looking back on the earlier release of the GDP number, which is much more robust than economists expected, and also a new home sales that rose at 1.7%, it's hard to conclude from those that the economy is really slowing, and that's the major divide in the market right now. Those who believe that supplies are tightening, and in the face of winter just around the corner, and the other side that believes that the macroeconomy will eat into energy demand, and prices will wax and wane as each of those particular schools of thought has predominance on any given day in the market. Today it's the supply theme again. Yesterday was the macroeconomic theme. Tomorrow might be again the same thing, but I think what we're seeing is a general consolidation to the top of the range, and that will serve as a base to launch prices for even higher later in the year.
Thanks, Mike. That was Mike Fitzpatrick from Man Financial. I'm Caitlin Sisney. Join us again for another update right here on etvFutures.com.